That's really what raising private capital is all about, is showing people in my network a way to build their wealth goals and do anything from putting their kids through college to quitting their jobs. And I've had investors be able to do both. I've helped people put their kids through college, and I've had multiple investors retire because of the work that we're doing with them.
Matt, thank you for joining me for our Thought Leader Spotlight series. I'm your host, Matt Camp, over here, head of partnerships at DealMachine. And on these, we really like to shine an industry spotlight on experts like yourself, who you've got inspiring stories to share. You can educate our audience on your journey and the lessons you've learned over the years. I know, really excited to welcome on Matt Faircloth, who you've been a full-time real estate investor since 2005. You've done dozens of fix and flips, office buildings, single family. I know your main focus now is bigger multifamily, but you've completed over $200 million in real estate transactions. So you can really speak to such a wide variety of things here. You hold thousands of units today, and you're an author, regular contributor on places like Bigger Pockets, and a podcast guest there, and you're Amazon best-selling author on top of all that. So Matt, appreciate you spending some time with us today.
Thanks, Matt. Awesome being here, and I'm glad to be here. I think that's how I got to know your organization, is through Bigger Pockets. So it's good to kind of complete the circle.
Absolutely, yeah, and really in general too. I know I read a little bit about your background. You have so many different directions we could go and speak about, but could you maybe talk a little bit more about really getting into real estate and that initial journey, and how it's kind of evolved over the years, and how your strategy is different today than it was when you first got started?
Getting into real estate's that's like a whole nother world from where I'm at today. I mean, I run a mid-sized real estate company now, but when I first got started, I mean, it was really about like just trying to find another way to live life, Matt. And I had read Rich Dad Poor Dad that my girlfriend, now wife, put in my hand. Started playing the board game that goes along with it, called Cash Flow. And it really just opened up my eyes, like, man, this is interesting. I could, kind of focus on building passive income and, running a business or whatever, to not do work I don't want to do. And then it enables me to live more and more of life that I want and get my time back and all those kinds of things. So when I first got started, Matt, it was, like my first deal was a house hack where I lived in a 3-bedroom, 1-bath, and rented out 2 bedrooms to 2 buddies of mine, and lived in the other one. And then we just slowly started doing larger and larger transactions and larger deals, enabled me to quit my job in 2005 to start the DeRosa Group full time. So, and then just, not that we've been we didn't hockey stick. We just kind of organically grew one deal after another and put one foot in front of the other over the years.
Love it. Yeah. It sounds like Liz was a great influence on you too.
She is. She's my muse.
There we go. Yeah, I know. I mean, I think
every successful man's got a great woman behind him.
Absolutely. Yeah. I mean, I think probably at least half our audience has read Rich Dad Poor Dad. Like it's a very common thread that comes up for people of inspiring their real estate journeys too. But I know with this time of year, just being, New Year's resolutions and thinking about 2023 and how to wrap up the year strong and all that. If you were somebody watching this, wanting to get into real estate, wanting to get started, and you were starting over, like you were, starting over today, rethinking that journey, is there anything you would have changed, or how would you have approached it today if you're a newbie sitting in that seat and thinking about, hey, should I get into real estate this year? How should I go about doing that?
Sure. First of all, there's never a good time or a bad time to get in real estate. Just you got to figure out, what you want to do, and then get forward and doing it. And real estate's actually can be a very forgiving business. And that, so as long as you focus, that would be my advice that I didn't do. I didn't take my own advice. If I had to Control Alt Delete, Matt, and start over again today, knowing now what I know now, and starting over, I would just focus. And that could be multifamily, that could be triple net leases, that could be, strip centers, that could be single family home, long-term rentals, or Airbnbs, whatever. But I would pick a vehicle that speaks to me, that speaks to my skill set, speaks to what I'm great at, speaks to something that I could further accentuate with what I'm given, the talents and resources that I have. And then I would stick to that. The problem I had, Matt, when I first got started was I remember there was a point where I was like buying 2 rentals and I had 3 fix and flips going. I was also working a wholesale, and, you know, working on education business and also running a property management company. And I was doing a lot of things at the best mediocrely, you know, like,
Yeah.
and I think that those that are successful are those that do one thing really great. And so I would focus on one thing getting started and pick that's the thing. I'm going to do that thing for the next 3 years. And I'm just going to do that thing. And I'm going to have the courage to ignore the shiny nickels when they come up, you know, and then do that one thing over and over and over and over again. And then when that one thing works, or when I completely go bankrupt from doing the one thing, then I'm going to try another thing, you know?
Yeah.
And that, cause I probably spent the first 5 years of my career, Matt, it stunted my growth in a lot of ways, trying to do too many things at once.
Yeah, I think that's even more tempting today with just how much education's out there, how easy it is to find various different avenues. And, you know, like you said, chasing that shiny object, it can be really easy to discover a new strategy, a new this or that, and want to go down that rabbit hole.
It's a lot of noise out there, man.
Yeah. Do you have any tips on kind of discovering that initial niche and going for it, like, and really figuring out like what is your strength? You know, how do you make that initial decision of like choosing a path right away?
Well, it first, it has to do, like, you got to look inside. You got to look 2 places, right? First, the first thing you got to do is look inside, right? And so what was I born with? You know, am I a good salesperson? Am I a good analyst? Am I a good negotiator? Am I a good business plan builder and an executor, right? Is that what I do? Just which thing can I do? And then you got to look outward and find the market in which you want to operate. And too many people, including me, got started operating in too many different markets, or just saying, I want to invest, Matt, in multifamily all across the United States, instead of saying, you know what, man, I live, you know, in St. Louis, Missouri. And so I'm going to invest only within the confines of St. Louis, Missouri, and even further courageous to say, just in those neighborhoods of St. Louis, not those ones over here, these neighborhoods, right? Yeah. Once you do that and you look at the talents you have, I submit to you that any market in the United States could be invested in, including markets that are super expensive, like, you know, San Francisco or New York City, right? Because people, believe it or not, there are people that make a lot of money investing in those 2 markets. You just got to know how to play that market, right? And so if you look inside, then outside, the path to success will start to make sense. You know, for us, multifamily made sense because I got started in Trenton, New Jersey, where we owned a lot of residential housing. And so I got really good at being a residential housing landlord. So now we own multifamily because I got my training in Trenton, as a Trenton landlord, hands-on, like myself, we're showing apartments and collecting rents and making the phone calls to tenants and that kind of stuff, receiving, you know, maintenance repair requests. So I accentuated that skill set into larger and larger multifamily. That's how I did it. Not because I just woke up one day and say, I want to buy an apartment building in North Carolina. Like that, buying an apartment building in North Carolina was like step 13. And people think that was step 1. It was not. You know, step 1 was investing in Trenton because that was the next town over from the town I lived in. Right. That's why I chose Trenton, because I lived next door to it. Right. And I was able to figure out good deals and how to make deals work there. It's just as simple as that, Matt. And then as we grow and became more sophisticated, it made sense to expand out of Trenton and take what we had learned there and bring it to the next place. But it's as simple as that. Look inside for your skills, look outside and find the market you want to make your scene in.
Yeah, I love your mindset as well of saying like, hey, yeah, no matter what the market looks like, no matter where you are, what location you're in, like you can make something work. It's just a matter of finding that right, you know, fit there.
You could make real estate work in Anchorage, Alaska. You know, it doesn't matter. It doesn't matter what the market is. If you find the market and find out where the play can be made, you can make money anywhere, any market in the United States.
Love it. So one thing, and you can see it in the background, your book there, Raising Private Capital. One thing I know we talked about as well.
Oversized, enormous version of it.
It looks great.
Right.
Yeah, one thing that we talked about a little bit there too is just the role of private capital in your journey and how that was really a catalyst to propel you to step 13, right? Can you maybe walk through that journey and why that was such an important tool, you know, within that journey?
Yeah. Well, once we had kind of honed down and figured out the the direction we wanted to go in and the market we were doing it in, then it made sense to take that, okay, here's a business plan that works, and here's a way that I can make money doing this. And so why don't I throw a catalyst in there to grow it faster, which is other people's money, right? And so the concept of raising private capital is simply about looking in your own network and finding people that have money and finding a way to inject that money into your network to, just make that deal that you've got 10x. And I can do 10 deals like this instead of doing my own money, which I could, but let me do 10 deals or a deal 10x the size using other people's money. Because the bottom line, Matt, is there are plenty of people in our own networks right now. And people listening to me on your show right now are thinking to themselves, man, I don't know anybody with money. Matt Faircloth must have gone to a private school or Ivy League school or born with a silver spoon in his mouth and given millions of dollars by his parents or whatever. No, my son was a steel worker. My father was a steel worker, right? So not born, no silver spoon, maybe like a wrought iron spoon, but that's it. And so I figured out how to find the money in my own network. And there is plenty of money in anybody listening's own network. All they got to do is know how to look for it.
Yeah. You have a phenomenal book on that, like we've been touching on. But can you maybe start sharing that playbook a little bit with our audience on, if, like you mentioned, anybody's got
Sure.
A network naturally, like where do you start? How do you identify people? How do you really pitch them per se? Like, can you kind of talk through that process?
You get educated per se, and we're not pitching anybody, Matt. We're giving them an opportunity. We're showing them how they can, right? Sorry.
Love it. Yeah.
We're showing them how there is another way to build their wealth as a passive investor, and they don't have to just rely on the roulette wheel of Wall Street to land on 00. So they hit Yahtzee. They can really take action and invest in things that are more tangible, that they can look and see and touch and smell to see where things are going with it, right? And so that's really what raising private capital is all about, is showing people in my network a way to build their wealth goals and do anything from putting their kids through college to quitting their jobs. And I've had investors be able to do both. I've helped people put their kids through college, and I've had multiple investors retire because of the work that we're doing with them, right? So whatever that is, whatever goal they have, finding a way to help them accentuate that through our business. And you look in 3 different places, but private money hides in 3 places: in plain sight, in cash, for people with a lot of cash are looking to put to work. And secondly, in real estate, in housing. People don't realize it, but 30% of America owns their primary residence free and clear, right? 30%, Matt. So that means that your Uncle Charlie or your Aunt Susie may own their home free and clear and don't realize that that is a badge of honor for them, but an enormous opportunity for them as well that they don't realize they can unlock. And so a good private capital raiser is there to educate Aunt Sally and Uncle Charlie that you can take that home you have and put that equity to work in real estate and make phenomenal income, or achieve further financial goals through that. And the third place is retirement accounts. And that is that, the person you went to high school with may have worked at a job for the last 10 years. When you hear them announcing, hey man, I've just moved to a new job and I'm really excited. Hey, great. Tell me about what you do with your retirement account for the company you used to work with. It was doing the company match that you socked away lots of money in your 401k for. Where's that? Because you might not realize it, but you've built up a lot of, money there that could get put to work and grown a lot faster and more securely in real estate.
Love it. Awesome. And really, when a lot of times as a newbie, like I think people can be a little intimidated or feel like they're not qualified or not credible enough for that. Can you kind of talk through, what are those prerequisites you need? How do you build credibility? How do you build trust with people from that perspective?
Well, first you got to get educated so you know what you're talking about, and so that you're not just, selling snake oil. You actually are offering up something that you have a educated background on, that you can say like, well, I've taken a lot of courses and maybe done a couple of deals and I can point to this and here's data as to why it works. And deals I've either seen myself or even done on my own, or my mentor did, or whatever it is, here's how they did it. And here's how you as an investor can work with that as well. So the first thing you got to do is get educated and get the tools, then enable you to understand your market, understand your business plan, and be able to present those things in a coherent manner to whether that's Uncle Charlie or Aunt Susie, the guy you went to high school with, in a clear manner. And the more educated you get, the more confident you'll get offering these things to, family and friends, because we got to start. I mean, my own mother is an investor in my business, and that's because I have confidence in my business and confidence in my know-how and confidence in what I've researched and know about real estate, that I know that real estate can deliver a phenomenal return to my own mama, and if you're not comfortable talking to your parents about real estate investing, that just means you haven't researched enough, and you need to understand it further to where it's a no-brainer that they should be in real estate through you.
Yep. That's a great barometer. Yeah. I think, is that why it can be intimidating for the newbie? Like, are there any misconceptions there of, how to get over that mindset for a newbie?
People can get skeevy. I've talked to so many people like, well, I don't want to talk to people I know about real estate investing. Isn't there some other place I can go, or isn't there? No, there's not. And people have to like and trust you because you're you first. Then they'll invest with you because they like and trust you because you're you. Then once it's kind of a reverse thing, right? Then once you've built this long track record, as we have, and we're lucky and blessed enough that our phone rings from people that I didn't grow up with. These are people that didn't go to high school with me, that didn't grow up with me, whatever. But we got to that point because we built a track record alongside people that I knew. Right. Then the next level, and raising private capital, my book talks about this, is that tier 2 of capital raising is using the people that you've used in tier 1, your core network, to give you referrals to take you to tier 2, and then eventually you make it to tier 3. You can point to the track record that you've built up in tier 1 and tier 2 and go viral and go on social and push on social media. Too many people try and do tier 3, which is they've never done a deal, but they're putting on social media why everybody should invest with them. But guess what? People see through that. People are not stupid. They see that, oh, you haven't done a deal yet, and you're going to put on social media or do big advertising as to why you're a great source to invest. Pretty quickly, people will ask for a track record as to, well, what have you done? What have you done that's successful that you did yourself, not just not hitching your wagon to somebody else? They'll eventually see through these things.
Yeah. That's a really, really good example of, for the newbie, potential initial mistake you can see. Are there any other kind of, bigger, mistakes or missteps that you commonly see, when people start to go down that path of raising capital that, would be good for them to be aware of now before they make that?
Yeah, man. The biggest mistake people can make in raising private capital is obviously two things: overpromising and guaranteeing anything. I mean, you really should be guaranteeing people. You let people realize there are risk factors associated with this. So it's not all sunshine and roses, just like Wall Street, by the way, that there's no guarantees there either, even though they would like you to believe that it is, there's not. That you've got to be clear with people what the ups and downs of real estate investing may be, and what the risk factors are. You'll be honest. You're a custodian of their money at that point. And so you need to make it clear to them what the best and worst case scenarios are. And so bottom line, it's over promising in one form or fashion. In other words, BSing people as to what they may see, and just giving them only the good stuff. That's probably the biggest mistake that I see people make when raising private capital.
Yeah. In setting those expectations as well, I know you do a good job in the book of talking about how to protect like all parties involved in any kind of private money transaction. Can you maybe give an outline there of, as you set those expectations, how to go about doing that in the right way as well?
Yeah. Yeah, there's plenty of documentation. You can be conservative in your analysis, and there's great tools to help you do that, like your product, DealMachine. There are great ways that you can use it to put forth to analyze properties and analyze deals, and just put a conservative light on it and tell investors, hey, listen, man, I was pretty conservative when I underwrote this. And so the upside could look like this and the downside could look like this. We actually use a tool called I want to call it a scatter chart, but it's not a sensitivity analysis. Sorry. We're meaning like best case, worst case scenario for the deal is that we think that it could operate within these parameters. And a big mistake I hear people do is like, oh, I'm going to do this deal. Like Matt and I are going to invest in this property and it's going to make 15.374% return on investment. Well, until it doesn't, until we buy the deal and something we weren't aware of happens or whatever. So what we quote to investors is a range. And I think that's a better way to look at it. Say, well, Matt and I are going to do this deal and it's going to make anywhere between 13 and 18% return. That's what we think. So best and worst case. There could even be an even worse case below 13% that it might be. So I think that you got to disclose to investors that range. And so you temper expectations and you work really hard to exceed the highest point, because that's the best thing you can do is under promise and over deliver. And you see it the opposite of that in most ways in this business, Matt. But I think those that are successful are those that temper expectations and end up doing their best to push over that.
Yeah, this has been fantastic, man. I think you do such a good job of kind of breaking down something that's, again, big, can be big and intimidating, and making it much more manageable of like, hey, here's where you can start, and inspiring to see your journey over the last, 17 years through this, man. That's awesome.
Thank you, brother.
Can you maybe tell people how to connect with you and everything that you've got going on right now? We'd love to have people, be able to get involved with you if they can.
Sure. In whatever form or fashion they'd like to get involved with me. And that might look like buying a copy of my book. That might look like, if they want to invest passively with DeRosa, they can learn more about that. Or they can learn from us too. We have education vehicles as well. And that's all on my website, my friend, at derosagroup.com, DEROSA group.com, derosagroup.com. They can learn all about us, and any way they'd like to engage with us further can be done there on that website.
Perfect. There we go. We'll link to that. And then also we have free resources on scaling your real estate business as well that we'll link to in the description as well. But Matt, thanks again. Really, really appreciate the conversation.
Thank you, Matt. Awesome being here.
Yeah. And to everyone watching, this is Matt Camp with DealMachine, and happy deal finding.